Okay, so let's spend a little bit of time just talking a little bit about insurance. And at a really high level, I guess we're talking about personal insurance here. So there's really four main types of insurances that you can get personally. And they're life insurance, TPD, otherwise known as total and permanent disability insurance. Then there's income protection. And those first three you can hold either inside super or outside of super. And then there's the fourth one, which we probably won't spend a lot of time talking about today, but it's trauma, and trauma is the only insurance that you can't hold inside super.
Okay, so in terms of life insurance, what that's designed to do is if you were to die, it would pay a lump sum benefit to your beneficiary of the policy and allow them to repay or reduce some of your debt, and also have a lump sum to help support your family's living expenses. Total and permanent disability insurance, or TPD insurance, is similar in the sense that it provides a lump sum payment, but it's paid out in the event that you suffer an event where you are unable to ever to return to work again. So something like loss of limbs or a debilitating disease. Similar to life insurance, it's designed to be able to help reduce or repay your debt, also help your family's living expenses and any modifications to your home.
And then the third type of insurance is income protection. And so income protection is designed to pay you, a percentage, so up to 75% of your income in the event that you were unable to work for a period of time. And so it's really designed to, I guess, help fund your sort of day-to-day living expenses. But it's important just to recognise that if you are going through career transition and your job's been made redundant, that's actually not a reason that you can actually claim on your income protection. It's a common question that we get from many people, I guess, isn't it? So that's sort of the three main insurances that you can hold within super. But I guess at a really general level, the thing to think about with insurance, no matter what type you're talking about, is do you have the right level of insurance? We often see some people who have perhaps got too much insurance and they probably really should be reducing it. And then of course you've got some people who might not have any insurance at all or not enough insurance. So reviewing the level is really important, and even just reviewing the actual policy itself or the insurer that you're with to make sure that you've got good quality cover.
Yeah, and with employer insurance policies, so a lot of the time they'll be life and TPD insurance, which is held through superannuation, or income protection insurance, which could be held outside. So your employer policies are funded by the employer, or at least part of it is. When you leave your employer, you generally have the option to continue that cover at your own cost. We would generally recommend taking up that option, at least in the short term, before you can sort of get a better understanding of what your current needs are and what your options are going forward.
Because there's a huge risk that your insurance might lapse if you don't take up that cover, right?
Exactly right. The last thing you want is you've lost that cover and then you try to apply for new cover and there's either going to be exclusions or loadings on that, so you're not getting the policy that you're after there. Another key area to look at with insurance is understanding whether you're paying too much. So look, it's great to have all the insurance in the world, but at the same time, affordability is a major factor in there. So it's worthwhile reviewing what current cover you have, how much you're paying, are there better policies out there from a contract perspective, but also is it a bit cheaper? If you can get a similar policy or a better policy at a cheaper rate, then it definitely makes sense to explore that further.
And another thing to think about with income protection, that we often suggest for some clients is there's often a really good advantage in thinking about holding your income protection outside of super. And there's some good advantages of that, which can be often you can get better policies outside of super. A great advantage is that you can claim a personal tax deduction on that money, which you can't claim, if it's held within super. So a lot of the times we do speak to clients about transferring their income protection from super into their own personal name, which particularly works if they can afford the premiums.